Let's talk to Mr. Theo Kemp. He is the Managing Director of Link Capital UK Limited. He's a Chelsea fan. Theo, how the devil are you, sir?
Very well, thank you. Very well, thank you.
Now, I went to see Chelsea play Crystal Palace recently, and Crystal Palace won.
Oh, I know.
It was a very, very nice day out. So
tough times.
thank you for those 3 points. Right, so you work at Link Capital. Who are you? And what is Link Capital UK Limited?
So Link Capital UK is a central London-based FCA-regulated commercial and business finance broker. We have over 260 UK-based lenders on our panel, and we specialise with helping any businesses or commercial entities raise any finance.
Okay, so what services do you offer?
So we have a number of different services, but we can help assist with both long and short-term related funding, and we specialise within the sort of small SME sector. Our services.
Sorry, what is SME?
SME means for small, medium enterprises, but
okay.
We can start all the way from the startup with regards to funding, and we also have a specific department for the property development and investment finance, so for construction and developers too.
Understood. So in terms of the sectors, what do you really specialise in?
So our specialising specifically is within the market of outside the normal banking criteria. So when the banks say no, this is where we can come into play, and we have a number of different funding lines available. We really come into our own when it comes to sort of more unique, complex or distressed cases.
Does that mean effectively I've got a bad credit rating?
Correct. So if people have a bad credit rating or a startup company with no trading history, we can really add value to these companies, either through equity raising or debt.
Understood. So what makes you different from the other finance brokers that are out there?
Sure. Well, traditional finance brokers will normally concentrate just on one sector within either the debt market, rather than the cross sector of both equity and debt raising. And our sort of core area is anyone that's not vanilla. A vanilla sort of market is not for us. It's anyone outside of that banking criteria.
Okay, so interesting. So in terms of a simple man like me, okay, what's the actual difference between debt finance and equity funding?
There's a number of different options when someone's actually looking for this. I mean, debt funding can be a very fast, efficient procedure in order to raise finance, but normally more often than not, it would have to be secured and it would be scrutinised. Whereas equity raised finance, you'll have a lot of support and backup from a mentee or mentor. However, there will be a proportion of your shares of the company that will be taken away from you, compared with debt finance, which there will be no shares taken away on that side.
Understood. Now you mentioned the FCA. You're fully registered?
Yes, fully regulated and authorised by the FCA. And also an associate, and we're also a full member of the National Association of Commercial Finance Brokers.
Understood.
So quite a great option there.
Okay, so would I come under the Stock Exchange Compensation Scheme?
Yes, you would, and also any sort of a criteria there that falls under that. Yes, we would.
Understood. So what does your company do in terms of entrepreneurship?
So we can help with entrepreneurs. We have a specific sector that can help in that area. With the entrepreneurs itself, we actually sit down with them and discuss what the best funding lines options for you. But we're not a consultant or business coach. We will purely advise them with the correct funding line for that specific firm.
Okay. So and how do you contribute in development with startup enterprises?
So how do
you contribute in development with a startup? So basically, are you holding their hand all the way along the line?
No, we do on the finance side with the related to the funding, advising them on how the procedure and how it works. But we will not advise them and do not advise them in terms of how they should structure their business plan or model. That will be down to a business coach. So
Understood.
We are purely about the actual raising of finance.
So I reckon my key question. Mm-hmm. What makes you different from going to the bank and asking for a loan? I don't like banks. They don't lend money anymore. They're really awkward. What's the cutting edge? Where's your niche?
So we don't like dealing with banks either. If we do deal with a bank, they tend to be in a merchant bank or an off high street bank. They're a lot more accommodating to these smaller, the SME sector. More times than not, when a bank say no, we can actually assist the client or the company trying to raise funds.
Well, you sound like my new best friend. And finally, okay, in terms of the difference of debt and equity funding, what are the different rates in terms of the interest rates?
Okay, interest rates for equity would be around, roughly speaking, 8 times ROI for equity raised finance. With debt funding, it can vary. It would normally have to be against the secured-based asset on that sort of side, especially if there's been no trading history.
Understood. Okay, so basically you've got the choice of the two effectively.
The two, yes.
What do you normally recommend?
It all depends on the client, how much support they require and they need for their business to expand. If they're looking for some support, then equity can be a really good option there. If not, then debt is always
okay. So just wrapping up, okay, give me 3 proper bullet points about your business.
Okay, we are a one-stop facility to raising finance. We can assist from the start to the end and guiding that client through and how the procedure works. And also, finally, we have the widest range of sort of commercial lenders available to that client themselves compared to the more traditional intermediaries.
Right. And how bad would my credit rating have to be to not be able to borrow money?
More than 3 or 4 missed mortgage payments would be a big no-no in this day and age. If you have a missed mortgage payment, it's a pretty severe, pretty severe aspect.
But if you're 1 month behind in your mortgage, is that the end of the world?
No, most certainly not. 1 or 2 months in your mortgage, and there's a valid reason, we can certainly arrange sort of funding there.
Right. But 3 or 4, then you're in the doghouse, are you?
Yes, more than 4, then you really are having some issues there. You can get away with 1 or 2. More than if you more than 3 or 4, then you've got some issues.
Right. Okay, Theo Kemp, Managing Director, Link Capital UK Limited. Good luck with your football team.
Thank you very much. Well,
I think you need more than luck, but
we certainly do.
Right.